Good morning, welcome to this edition of the video market analysis from ADS Securities. Beginning with the main story again from China. The People's Bank of China finally intervened by cutting the entire interest rates, including the main rate, including also the lending rate and the reserve requirement ratio. And this is an action aiming to calm the market. However, the European equities saw a greenish day yesterday. However, the US equities unfortunately closed the day lower after trimming all of its gains at the closing bell, and it seems that the Chinese action is not enough to keep the hopes higher for the time being. However, the Asian equities today remains higher until this report is released, with Nikkei 225 adding a 3.3%, Shanghai Composite Index also adding around 4% or 4.3%, and finally Hang Seng is adding 1.15%. But this may change at the closing bell of the Asian sessions, and traders need to be very cautious as the fear is still controlling the market. In the US yesterday, some economic releases or figures were released with positive outcomes and negative outcome at the same time. First of all, the positive outcomes came in from the consumer confidence index, which basically rising toward the highest level since January at 101.45, up from almost 92. In addition to that, the new home sales, or the negative news, came in a slightly disappointing number, which is the new home sales, which increased slightly less than expected, rising by 5.4%, while the estimates were to rise by 5.8%. Moreover, the previous reading has been revised sharply lower toward minus 7.7 instead of a decline of 6.8%. The flash services PMI also declined back toward 55.2, down from 55.7, which is also the lowest reading in almost 2 months. But most importantly, in all these data yesterday, basically it was the Richmond Fed Manufacturing Index, which unexpectedly declined back to 0 in August, down from 13 in July, despite the fact that estimates were to decline very slightly toward 10 only, and this is the lowest level since April of this year. The US dollar yesterday rallied after a series of declines, and in the past few days. And as we noted in our previous report yesterday, that a short-term rally could be seen, but likely to be limited well below its 200-day moving average and or its a trend line, or the broken trend line resistance. Basically, for the time being, the index failed exactly at these levels, which is the 200-day moving average. Yesterday it was at 94.77 and closed the day well below that level, and also declined back toward 94, down from 94.72. So far, we still believe that the upside retracement could be over for the time being, and the downside trend may resume in the coming hours. Looking at some technicals for today, there are no significant economic releases in Europe today, while we wait for the key data from the US again. Eyes today will be on the durable goods data. The estimates are to decline by 0.4% in July, after rising by 3.4% in June. And the most important thing today is the core durable goods data, which is set to rise by 0.3% after rising by 0.6% during the same period. Looking at some technicals, finally, the British pound again. The British pound retraced again, or the pair retraced again yesterday after the beginning, or after breaking out at the beginning of this week, declining back to as low as 56.80, which is also remains a solid support area for the time being, after trading within the tight range for the past few months, or at least since mid of July. But after breaking above that level at the beginning of this week, so far we still believe that right now we have to watch this level, because it represents a trend line support in addition to also to another support area here. So this should be watched very carefully. For the time being, I would be interested to long again on dips with stops below the 50-day moving average, which is here, which stands around 56.21. Looking for another rally above this week's high, maybe around 1.1. Also, maybe we can rise above 58 again. This would be our next target. The euro also held yesterday well above 1.14. which is another solid support area, 1.14 and 1.1430, closing the day also lower. However, buyers are still there, and the downside retracement may not last for long, especially that the US dollar index also failed to recover yesterday above its 200-day moving average. And meanwhile, longs are preferred above 1.14 with stops below 200-day moving average, which basically stands at 13.22, looking for another rally above the previous high of this week. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow. Have a good day.